Welcome. 6th February and today's commodity news are focused on metal markets. So we'll have gold, we'll have silver, we'll have platinum, palladium and copper. So let's do not hesitate, let's do not wait and take a look on the charts what we can expect this week from metal markets. Let's begin with the gold, and on the gold we can see retracement from the heights reached after Federal Reserve decision about the rates in United States on Wednesday, when it comes as expected by 0.25% up, and on Friday we had NFP non-farm payrolls that pushed gold drastically down. The thing what happened on last week was that first we'll expect very slow rising rates, but now with the very strong market data and unemployment data shown on Friday non-farm payrolls in United States, the whole world is not, on the gold market at least, is not worried about the recession. It's worried that Federal Reserve has all the tools, all the environment to rise rates even more than 5%, which is currently expected. So that's why the gold drop used this NFP data and this Thursday day as an excuse to realize some market profits. As you can see, I created a small Fibonacci retracements between the bottom on from September till top on the last Thursday. And as you can see, we already drop up to 23.6%. So that's why I already set here this finger to show that I expect this market to drop here. We drop under 1900,000. So 1900, and I can feel that now we can drop to this zone between 1827 and 1840, especially that SMA 55 is in the same area. So that's why I think this is the area we'll here see the price this week on the gold, as this gold has at the moment nothing to rise except some Federal Reserve information about the next rates rising. So let's see that gold dropping a bit more, another $30-40, and we'll be probably able to get some profit from it. So if this today's candle, Monday's candle, will end up under this $1,878 line, it's quite possible that will drop to this zone here. And if it's about the other metals, the silver followed the gold and drop rapidly, drastically. We can also create this small Fibonacci retracement here on the silver market. And of course I will change the colors here to match it, to make it separate from this bigger Fibonacci retracement we already have here on this chart. And it's done now. So as you can see, on the silver market it's already deeper, right? SMA 55 was much higher and we are already on a big Fibonacci retracement. I will show you which way it was created. It was from here, the last February tops, right after the Russian invasion of Ukraine started, till bottom at the end of August last year. So we've got on the 50% here. So it's currently a good point to bounce back, to start rising again. But it's a silver market. So first it will go after the gold. Mostly it goes after the gold, but sometimes silver which should be treated as an industrial metal, as it has more industrial demand than gold and everything like that. And the recession that the world is fearing right now on the markets should keep the silver drop down. On the other hand, of course, silver is necessary for environmental changes in our energy sector, which I mean especially solar systems. That's why the silver is needed. We expecting higher demand than supply on the silver market this year, so this price under $25, it's really surprising. So personally, I think this market is held by some big whales from the Wall Street. I don't know which one, and I don't have actually any proof except one. The fundamental price of silver is very low. By fundamentals, by the numbers and every supply demand balance and everything like that, this price should be much higher, but it's not. So I'm not of course fighting with the market. I just follow the rules they setting up, but I highly think that anyone who's saying that we'll see 40 or 50 or $100 on the silver market in the next couple months probably is wrong. It's of course possible, but I don't know who is holding this silver bag, but it's holding in a very tight grip. That's why this I think for the next couple days we expect gold to fall. I think silver will follow a bit, but it's highly possible that it will not fall more than 80 cents. So somewhere here, somewhere between those Fibonacci levels, as it will follow the gold, but it's not going to respect own Fibonacci lines. Of course, we can see that the 61.8 was highly fighting area. It was great support line here on the whole January, but still we now dropping now, and we don't know when it's gonna go. Probably here on the $21, 21.1, that will be a very strong support, but it will be probably touched only by those by the full candle, right? It won't be crossed too often, so it will be a strong support, but from the distance. So this is my point of view on the silver market. And with the platinum, it's also start following gold, the precious metals. Of course, it's an industrial metal. It's necessary for hydrogen technology, especially for hydrogen technology in cars, which is currently in development by Mercedes and Shell, that will create cooperation to build hydrogen stations in the whole Germany plus Benelux countries. We've got also Polish Orlen that will build first hydrogen stations probably in next 2 years in Poland. So a lot of companies are going for hydrogen market, which is necessary fuel for the main transportation on land, as it's more efficient than energy and electric cars, because it doesn't need to spend hours to charge a truck. That's why hydrogen batteries are better, because they can be switched on a station, which takes much less time than typical charging the electric cars. And please remember that the trucks we're talking in Europe, at least, it's weighing 30-40 tons each. So how much batteries you need to run it for 7, 8 or 10 hours of driving with such huge weight. And then of course imagine how long it's gonna take to charge it. So it will be pointless to use we could forget about the driver's work time, as they will spend most of the time charging their trucks. That's why hydrogen is the future for their wheel transportation solutions. So the platinum is needed. So that's why I think this platinum won't drop much more. I still expect that this platinum should reach $1,400 per ounce for the next 12, maybe 18 months. We had a nice jump here, and I think we won't drop even much more, so 956 should be a strong support. And as you can see, this is also the Fibonacci retracement between February 2022 and end of August 2022. So this is amazing that the platinum is so cheap. And if we talk about platinum, don't forget about the palladium. And if you follow the macro POV, our channel, which I hardly recommend for you to subscribe right now, if you still don't subscribe it. So you know that I show the information that this market will probably keep falling. This market will keep falling as 80% of its demand comes from the fuel-based engine, the petrol and diesel engines, as it is used for the catalyzation to clean the the CO2 and everything like that. So the thing is, European Union and United States are resigned from the fuel-based engines. 2035 is the end of the year to sell a brand new engine cars, fuel cars, classic fuel cars, yeah, right, and petrol-based engines. That's why the palladium will probably lose a lot of market, especially that some companies will start offering a new models with petrol engines much sooner. With DS, which is a luxury branch of Citroën, will start next year to not offer a brand new models with petrol engine. The Audi, the Fiat, the Peugeot, the Renault, most of the European companies will end offering petrol engines in the new models till end of this decade, so till 2030. Of course, it's creating a lot of other problems, and this is not able to tell you that California, which is one of the states that pushing to resign from fuel petrol-based engines, they already last year tell people not to charge the electric cars as there is not enough power in the grid. Wow, surprising, right? And for this winter, that Switzerland is already prepared some emergency measures to save the energy, and one of them was also to drop the denying people to charge their electric cars. So we are pushed to use electric cars, and then they will start telling us you cannot charge them. And with virtual power plants, which is the system that everything that is charged to the wider grid can be drained from energy. So you put a charger, your car on a charger, and they will just take the power out from it because they need it for the wider grid. Wow, that's really amazing what they're doing. But going back to palladium. Palladium, 80% demand is cars, petrol cars. So in about 10 years we'll have a huge oversupply on this market. The demand will keep dropping. Probably there is some chance to slow down if the China will put more efforts for environment cases. So they will keep running the fuel cars and they will pushing for less pollution from those cars. Then they might stop palladium price from dropping. But if anyone is counting to this palladium to rise above $2,000 per ounce, well, find a new way to use it, right? Create a new way. I think it was 2021 when one of the Russian companies created a prize for the scientists that will find a new use for palladium, as they are one of the biggest world palladium suppliers. They need to save their incomes. So this is quite desperate when you have to offer the price to find a new demand market for the palladium. That's really something showing about this market, that It will be probably on a way to drop to more, and I think we can see in the next 2 years, of course, because it will be a long drop, but we can make sure that we can be kindly sure that palladium will be cheaper than platinum once again. It will probably not drop under the $1,000 for the next decade, but it's highly possible that it will keep dropping. As you can see, we are already now on $1,580, and there is not so much to drop even more, which is $1,530. So it was the beginning of this rally on this market in December 2021. So I don't count on a big rally. It might bounce here, maybe a dead cat bounce, or maybe a bit higher to SMA 55, which is now currently around 1800. Yeah, then it's great to be there. And I said we'll take a look on a copper market, which is also on retracement from the recent local highs. And as you can see, I also created this Fibonacci retracement from this top on the February 2022 and the bottom of July 2022. Those rising here was the hopes that China will rise again after the resigning from zero COVID policy. So that was the hopes. Then we have this Chinese New Year's 1 week off, and now we can see that there is still huge stocks in copper market in China. So it's quite surprising it's not coming, and there's a huge fear of recession recently. So the rates are still going higher on expected level, but still going higher, and the China is not rising as fast as everyone on this market, on the copper market, was counting. So I think we can see this week even $8,500 per ton of this copper market. So this is all. I help you to understand the market, what's going on. I know I talked about some things that will be considered in years ahead, but still keep it in mind. Thank you very much for your attention. Don't forget to subscribe, like, and share this show, and keep following us for more. Thank you very much.